Tesla stock didn't bounce with the rest of the market Thursday, closing below its 200-day moving average for the first time since March 2020. It's a gloomy signal with a positive aspect. Tesla dropped 3.1% Thursday, closing at $571.69, below the stock's 200-day moving average of $582.56. The S&P 500, Dow Jones Industrial Average and Nasdaq Composite rose 1.2%, 1.3% and 0.7%, respectively. Moving averages are helpful for traders looking to assess at what level a stock might bounce after a period of weakness, or when it could start to struggle after a gain. With the 200-day moving average breached, the next solid base of technical stock price support is around $420 a share, down another 25%. That is where Tesla traded before rising substantially in late 2020, around the time the committee overseeing the S&P 500 said the stock would be included. Those potential losses, wiping out some 6 months of gains, are the bad news. The good news for people holding the stock, and those who think it should rise, is that Tesla is now oversold. That is a term, with mathematical foundations, that traders use to describe the momentum in a stock's price. Oversold conditions mean that things have gotten really bad, really fast. When that happens, usually all the bad news is reflected in the stock price, and shares are due for a bounce. The last time Tesla stock was oversold like it is today was March 2020. Shares rallied about 45% in the following month. That decline came as COVID-19 slammed the broader market, but this time, the rest of the market is near all-time highs. Tesla stock is down 37% from its $900 52-week high. Tesla stock was also oversold in early 2019. Shares fell 15% during that sell-off before rallying higher around October 2019, when a surprise quarterly profit started the rally that eventually made Tesla the world's most valuable automaker. A 15% drop from the current level would put shares below $500, while a solid bounce from oversold trading conditions might get Tesla shares back around their 50-day moving average of roughly $670. That would amount to a gain of about $100, or 18%. With the potential for a loss of 15% to 25%, an upside of 18%, the technical risk on Tesla appears slightly skewed to the negative. Technical considerations like these tend to reflect what is going on with a stock in fundamental terms. Investors are worried about a mix of things, including the recent Bitcoin flip-flop, CEO Elon Musk's decision not to take payment for cars in the cryptocurrency, and slowing growth in quarterly operating profits. Also on the list are higher interest rates, which ding valuations of high-growth companies more than others, minor issues with Chinese regulators, a global semiconductor shortage that is constraining auto production, and increasing competition in the market for electric vehicles. Of course, factors not directly related to a company's business can move a stock too. One of Tesla's big shareholders, Cathie Wood's ARK Innovation ETF, is having a tough time. It dropped another 2.6% Thursday. The more investors sell shares, unable to withstand recent pain, the more Tesla stock the fund would have to unload. Shares of Chinese electric vehicle maker NIO were trading lower on Thursday, after a Wall Street analyst said that the ongoing global shortage of semiconductors will continue to hold NIO's production down for a while longer. Citibank analyst Jeff Chung, who recently hosted a call with NIO management, wrote on Thursday that the chip shortage has remained the key constraint for NIO's production in May. NIO, along with Ford Motor Company, and Honda Motor, has suffered from the effects of a February fire at Japanese chipmaker Renesas, which has reduced some auto suppliers' access to chips even further for the time being. According to Chung, NIO said that it felt the impact of the Renesas fire peaked in early May, and management now expects supplies to begin to improve in June or July. Chung maintained his previous hold rating on NIO's stock and his earlier price target of $57.60. That's probably part of why NIO's stock was down on Thursday. Another factor is almost certainly the ongoing decline of electric vehicle category leader Tesla, which seems to be pulling down other EV names for the time being. Not all the news was bad, though. Chung also noted that NIO said market demand has recovered well since the Lunar New Year holiday period in February, and that it's confident that the pace of new orders will continue to increase. While it's always hard to watch a growth stock lose ground in big moves day after day, I think that investors holding NIO can take some comfort from the longer-term story, which remains, as Chung's note suggests, pretty good. AMC Entertainment Holdings cashed in on its Reddit rally in a big way. AMC shares rocketed higher Thursday after the company said it raised about $428 million in a stock sale. AMC Entertainment stock closed up nearly 24% at $12.77 on Thursday, after management said it completed a 43 million share at the market equity offering, begun April 29, raising about $428 million before commissions and fees. That implies an average selling price of about $9.95 a share, far above the stock's 52-week low of $1.91. Crypto platform Coinbase late Thursday reported first quarter earnings of $3.05 per share, or $771.5 million, on revenue of $1.8 billion from $585 million in the previous period. The results were mostly in line with investor expectations and matched the company's preliminary report that was released ahead of its April 14 listing on the Nasdaq. Investors were expecting Coinbase to report EPS of about $3.07 on revenue of $1.8 billion, according to a consensus of analysts' estimates polled by FactSet, as of May 12. The company said that monthly transacting users, or MTUS, more than doubled to 6.1 million from 2.8 million in its previous three-month period. Coinbase also boasts 56 million verified users. The company says it expects user growth between 5.5 million and 9 million. The report comes amid a downturn for Bitcoin and the broader crypto complex. Shares of Coinbase initially slumped 4% in after-hours trade, but later recovered to flat after closing down 6.5% in regular trading Thursday. Investors will be eager to hear more about the company's stance in addressing growing competition in the crypto trading space against the likes of Robinhood Markets and Gemini. Thanks for watching. If you liked this video, hit the subscribe button to receive more like it in the future.